Hello everybody, it is Christopher Mullen from TheGoldAndOilGuy.com. It is Sunday, September 13th, 2009. I hope everybody is having a great summer weekend as all the kids go back to school and each week seems to be getting a little cooler. It is in Canada here anyway. Okay, well, let's take a quick look at the gold charts. If we look at gold stocks right now, they are on a short, intermediate, and long-term buy signal. And what I mean by that is we're seeing breakouts to the upside on the daily, weekly, and monthly chart. So let's just flip to the charts and I'll show you what I mean here. Oops. Okay, so on the daily chart, we have got two buy signals in the recent month and a half. And you can see these buy signals are generated by my simple trading model, which isn't completely shown here, but it more or less has a trend line break, which is a break to the upside, and then I like to see a pullback and a reversal. And once we get a reversal candle, it creates a new pivot low. And that pivot low allows me to draw a new trend line for support, and I get in on a reversal candle. So we would ride up here and we would generally take some profits on a new high, and then we would hold a core position, and if support is found here and we get another reversal candle up, we would actually add more to the position again and ride the next wave up, and so on. And that's how I do the daily trading charts. And the moves generally last 1 to 20 days, and I'm looking for 1 to 5% return. Now you can see the second buy signal that we had, it was a little fishy. The gold started going sideways, and that's what shook us out of this trade here. But you can see this reversal is very strong, and it broke out not only this smaller level, but it broke out of this larger resistance trend line. So this explosive move higher is doing very well for us. We're sitting in the money, and we're just watching prices go higher. Now this breakout was extremely powerful because another longer term chart signaled a buy signal. So if we flip back to the weekly chart, you can see we had a breakout 2 weeks ago, and by that we have now the longer term, the intermediate traders putting money to work in gold and gold stocks, and that is what really pushed the daily chart higher. So that is what I like, and you can see this trend line, you actually can't really see it, but there is a spike high here and it connects right across to the top. Anyways, it was a beautiful trend line break. Momentum is to the upside now, and if we zoom out to one further time frame, we can actually see the monthly chart, and we have a very clean breakout to the upside. We have momentum crossed over to the upside, and gold stocks are now outperforming the price of gold, which is very bullish, and it just is a leading indicator generally to what gold is going to do, because when gold stocks are outperforming the price of bullion, it's generally an indicator that smart money is moving into the gold stocks because they're highly leveraged with what gold will do. So that is three bullish charts pointing to higher prices for gold and gold stocks, and that is what we are positioned for right now, sitting with a long position. Now I do want to mention that because gold is flirting with the $1,000 mark, it is at a more or less a 2 year or a 1 year, you could say, resistance level. And if gold can break that, we're going to see gold rally probably to the 1,200, 1,500, maybe even $2,000 level within the rest of this year. But if gold does find resistance, we're probably going to see a very sharp pullback, and we could see the HU, which is the gold stocks index, dip back down to the 200 or $175 level, which is a very sharp sell-off. So, we have locked in some profits last week, and we continue to hold a core position as we wait to see what happens. I don't mind seeing a breakout, and then I'll trade the pullback. We'll scale in on a pullback, but I don't want to be fully loaded at a pivot point because it will go one way very quickly, and you don't want it to go against you. This is a higher risk time to trade, believe it or not. So I am keeping our exposure medium, and we're taking some money off the table, and we've got some riding. So we're just going to be watching for it. We have stops in place in case we get a sharp sell-off, but right now we're just enjoying the move higher. So in order to take control of this, I do follow these funds. I've got 5 funds here. 2 of them, the bottom 2, are Canadian. There is a gold fund, a gold mining stock fund, silver fund, a Canadian gold stock fund, and CEF, which is a Canadian gold and silver bullion fund. And you can track the performance of them. You can see how fast they move. The gold miners index and silver are always the top performers. They're highly active and provide a lot of volatility. But it's a double-edged sword. So it can go against you just as fast. I've always traded GLD, or the double leverage gold fund, and it is my favorite fund to trade. But this just shows you what you can do and the difference in performance, and and that's about it for the gold wrap up. If you'd like to receive my free weekly trading reports and videos, you can go to goldandoilguy.com and simply enter your name and email address, and you'll receive these via email every Sunday and Wednesday night. I hope you have a great week, and I'll speak to you soon.